Hello and welcome to After the Dust Settles, a webinar on how financial services are taking a sustainable approach to GDPR compliance in a new era for privacy. My name is Dave Clemente. I'm the research lead in the Deloitte cyber risk team, and I'm very pleased to welcome you here today and to welcome several core contributors to this report for a very interesting dive into GDPR 1 year on. So first, let's get started. The report looks at how the GDPR has affected financial services and their customers in the first year of operation. It's a follow-on from a survey we conducted in November of last year, which looked at the impact of GDPR on companies and their customers across all sectors of the economy. This report is based on interviews with data privacy specialists in Deloitte, financial services organizations, and the UK's Information Commissioner's Office. Broadly, the report finds that financial services companies have more easily taken it in their stride than companies in other sectors, in part because of a long history of complying with fairly strict and rigorous privacy and data protection rules set by financial regulators. The strategic approach and procedures from FS are therefore more likely to be more mature than those of firms in other sectors. And this provides a guide to how other sectors could approach GDPR. And it provides some learnings from organizations that have had to look at this and prepare for this in significant detail. So I'd like to continue then by introducing, welcoming our three speakers today. Stephen Bonner from Deloitte. Stephen, perhaps you first.
Yeah, thank you. It's a great pleasure to be here. It's a fascinating topic. I'm a partner in our cyber risk and privacy services team. I lead our work on GDPR around financial services. So over the last few years, I've been working with around 40 different financial service organizations helping deliver their GDPR program. So there's much to share, and it's been a fascinating journey. It's great to hear. I know some of my colleagues in financial services who helped might not agree it's been that easier journey for financial services. Perhaps that's because they haven't seen beyond that into how others have had to face this challenge. But very pleased to be here and looking forward to the discussion.
Thank you, Stephen.
Hi everyone, my name is Maya Futals. I am a senior manager in Deloitte Financial Services practice, and I am also part of the GDPR team in Deloitte. And contrary to what Stephen said, I think they've been doing great. They've been dealing very well with this new regulation. It's been a very positive experience, I think, as you will probably see from our report. So this is going to be an interesting discussion, Stephen.
They've certainly got to a good place. I wasn't saying that, but sometimes it's been hard work.
And I'm Michael Imes. I'm the main author of the report. I'm the senior content editor at FT Live, which is the Financial Times conference division. And I write the occasional article on, usually on technology or cybersecurity for the newspaper. I'm a contributing editor of The Banker magazine, which is owned by the FT. And I'm also a chartered member of the Chartered Institute for Securities and Investment, CISI. And there's several professional forums there, specialist forums, and I'm on the FinTech professional forum as the deputy chairman. So it was a great challenge, but pretty straightforward for me, because it's essentially a technology and regulation issue for me to tackle this. The initial brief was to write about 5,000 words. It ended up being about 13,000. Mission creep, that's what they call it in the military. And I think we came up with some very interesting findings and conclusions.
Thanks for the introductions. Now, Stephen and Maya, I know you've looked at GDPR for some time, not just over the past year, but in the often frenzied and some might say even frantic run-up to the launch at the end of May in 2018. Whereas, Michael, you've come to it slightly more recently, and you've had the opportunity to use your journalistic skills to extract a whole host of interesting quotes and insights from the contributors and the people that offer their thoughts to this report. What have you seen? What's been your journey on GDPR more recently? What is coming to it more recently, perhaps than others in the room? What has struck you about the GDPR and its implications?
I knew about it, obviously, but I started by reading all the key documents, not the actual regulation in depth, but the key documents put out by the European Commission on the regulation. And then I looked at the ICO, the Information Commissioner's Office, the UK Information Commissioner's Office, which is the National Data Protection Authority for the UK, looked at some of their key materials. Then I interviewed various experts in Deloitte and then some industry experts, practitioners from financial services organisations. And just one of the interesting things that came out of this that I didn't necessarily expect was the impact on business operations of GDPR. The main thrust of this report is on the compliance challenges. It's all very well for a firm to comply, but if compliance is so strict and costly that it starts to have a negative effect on business operations and commercial success, and there's a chapter on this in the report, then that can be quite a serious thing. On the other hand, which this is my final point which I think is particularly interesting, I interviewed Simon McDougall of the ICO, and I asked him this question about the negative impact on business operations. And he said, yes, that's possible, but in fact, you can actually look at it as providing commercial advantage. And he gave the example of the data portability requirement, for instance, because a lot of firms will regard that as a compliance burden. They have to allow data subjects to move their data to another firm, and other firms can then access that data. But it's a double-edged sword, said the ICO, because if you look at it as an opportunity, you can actually get data from potential clients into your own system. So firms have a choice. They can either ignore data portability and let their competitors use it to their advantage, or they can use it to win market share rather than lose market share.
Well, it's interesting. One of the questions we asked the organisations we surveyed was around what's driving your GDPR program. What was the key things that made this work? And interesting, in financial services, the top issue was improving customer trust. So with threat of regulatory fines being fourth in terms of key priorities, with interesting around reputational damage and hoping to drive increased efficiency in their processing. So definitely it has been driven as a compliance issue, but it's definitely the customer trust aspect, I think, has been the motivator to get the benefits. And it's interesting for the very large organizations, even with these very large potential fines, I think they still see the reputational harm of failures to meet this is much higher than the potential costs that they may see from regulators, at least in the short term.
Thanks for that. That does lead us in nicely to the first primary section of the report around compliance challenges. And as we go over to that slide, I'd just like to invite our many listeners to please contribute questions as we go along throughout this webinar, and we'll pick them up as we can during the session itself. So on to compliance challenges. Despite generally being better prepared than firms in other sectors, financial services has in many cases found GDPR compliance a challenge. Certainly they're not alone in that, partially because of its broad scope, affecting as it does so many different FS departments, systems, IT systems, and people, and the severe penalties for getting it wrong. The quote here from Suzanne, RBS, kind of touches on this point around complexity and lots of moving parts, in particular the regulatory element of complexity and compliance. So I'd like to put the question out to our panelists. So where is financial services tend to do well? Where are they doing less well? And where have they come across difficulties? And even are they able to improve? What can they do to improve? Certainly some things can be done. Still low-hanging fruit here. Only a couple questions to answer wrapped in that run-on sentence. So let me just put that out to the three of you.
Well, when I look and work with organisations, there's some base things that across financial services are there that often are lacking outside of financial services. And it's interesting working with financial services, they don't always realise this is the case outside. But many financial services have a very well-developed three lines of defence. With execution in the first line and then an independent second line providing constructive check and challenge. And in many financial services organizations, that's a natural place for the data protection officers to sit. Some are doing execution work in the first line, there's a separate team reviewing them, but many sit in that second line, and that's built in the independence and oversight that GDPR is looking for, that some organisations outside of financial services without the rigour and robustness of development that sometimes struggle with. And also one of the absolutely key elements of GDPR is around accountability. And in financial services, things like existing regulations such as the senior managers regime, where there's very explicit accountability and a need to demonstrate compliance, that's resonated very well with some of the elements of GDPR. So they've built in the structures to collect evidence, to aggregate it, to distribute it to the correct decision makers within the organisation, particularly if their organisations really do have multiple different legal entities. And cutting that data in those ways is a real challenge if you're the first area doing that. And for some outside of financial services, where GDPR has come along, that's been very difficult for them to get that proof and evidencing to the correct decision makers to show true accountability. Whereas in financial services, that's tended to be a little bit easier. Clearly varies depending on their resilience. So I think, and their maturity. It's quite driven, I think, by financial services organisations are used to regulation. They're used to complying. They're used to being able to demonstrate that compliance, and they're also a business that are very much driven by building customer trust. So many of the goals of GDPR align with what they're trying to do anyway. By being transparent with their customers, it builds greater loyalty and engagement. So the requirements that GDPR force them to do, I think, are very useful. And earlier, you touched on portability. Most, say, on the retail side, they already have account switching. So the kind of capability of this has been embedded to an extent. So adapting those, making them comply with GDPR, is not a huge step and a complete mind shift change that it may have been in some other industries.
Yeah, and it's been apparent that they've really taken it seriously. I mean, the financial services that we've worked with, they had programs in place. They have hired data protection officers, data protection staff, put in whole new compliance frameworks for data protection. So they definitely have taken this seriously and done what they needed to do to reach compliance by that 25th of May last year. And that's also been something quite apparent for our listeners probably, because I'm sure everybody here in the room remembers the flurry of emails that we got from smaller organizations with their updated privacy notice, usually in the days leading up to the 25th of May. That was not so much the case with financial services, because they generally had this in place already. Let's not forget that before GDPR, there was data protection legislation in place. And they were already being compliant with that. And in general, these financial services organizations, they go for compliance. This is what they want. They are heavily regulated. They can easily be shut down if they're not doing it right. They have to come up with a strategy to become compliant with all of the legislations that financial services are due to adhere to.
Mm-hmm. Yeah, and they're very good at using technology to comply. There's a section in the report we'll talk about later about how they're good at using various technical tools. They're also good at demonstrating accountability of board directors and executive managers. They're doing well on staff training and awareness. But things that they're not doing so well at, for example, managing data asset inventories, that can be a particular challenge.
Mm-hmm. I think financial services is so dependent on data. It has such large volumes of it, and often, as some of our respondents drew out, they're working with legacy systems that have been connected by multiple mergers and acquisitions. So often it doesn't have the clarity. That's at one end of financial services, the very large sort of retail organisations. The other end, we have fintechs and challenger banks who obviously don't have those same challenges, where perhaps questions around retention are not an issue yet because they haven't been around long enough to have data that even approaches retention period. So it's interesting to see the spread there. I think the only other thing I'd say that's been a challenge for financial services is because they're so used to regulation and working with particular financial services regulator. Clearly, the ICO and the other ones around Europe are a very different set with a different scale of resourcing and engagement with financial services. They have a distracting set of other priorities they need to focus on to make sure we as broader consumers are protected. So it's been interesting to see how the groups that perhaps have a really good engagement with a financial services regulator around, say, security, perhaps might have had the relationships in the past with the ICO in this way. So it's a bit of a change. You've got to think about things in a different way and engage in a different structure, perhaps supporting a regulator that has different priorities than they're used to seeing in their more traditional financial services regulators.
The point around data was a good one. Some significant amounts, and some of the challengers and fintech perhaps less so. I mean, this leads us nicely on to the next section around data breaches. And here we have a stat up from the report released December of last year, noting that 25% of consumers in all sectors, not just FS, said their trust in their organization would decrease if it suffered a sort of data breach. 17% said they would stop using its services or buying its products. And certainly that customer churn will vary across sectors, and certainly within financial services as well, depending on the product. So I'd like to put this topic out to panelists here. As far as we know, to date, there have been no confirmed major data breaches of financial services since the launch of GDPR. At least I should caveat that by saying publicly confirmed, though it's possible some could have been reported to the various regulators across the EU member states. Has there been, the point around trust is a good one. Stephen, earlier you noted that retaining customer trust in financial services is critical, perhaps more for some organizations than for others. Have organizations been overly fixated on the 4% or 20 million? Is it the big upper end of the regulatory enforcement stick that has distracted organizations, or have they kept that pretty well in perspective? And how have they?
Talk about focus. I think the press have been jealous myself. That's a really good focus for us. Not that I do much conventional reporting on this sort of negative type of event, but certainly as soon as a big fine comes in, the press will be on that, looking at all the negative aspects. There is a campaign group called Privacy International, and that has, for example, filed a number of complaints to the British, Irish, French data regulators against several companies, including 2 credit rating agencies. And it'd be interesting to see how that pans out and whether it results in any kind of action by the data protection authorities.
Yeah, it's interesting. In the report, the ICO, they highlight they've seen a doubling in the number of complaints they're receiving. So I think definitely there's a question: are things getting worse, or are users just more aware of their rights and willing to enforce them? And my conclusion is they're just more used to enforcing them. I think we can focus on these mega breaches. What's fascinating in financial services organisations is given the scale of data processing they do and the nature and type of it, there is a constant stream of minor issues. And the interesting question that you see both within organisations, regulators, how do you determine those where these are isolated incidents that are an acceptable cost of the flexibility of doing business, and where are they indicating a systemic failure to protect data adequately? And that's the interesting challenge. Is less, I think, the mega breaches. We're fortunate we don't see those very often in financial services. I think because of the focus on trust and the generally high levels of investment. But it's more that day-to-day drip of minor things. How do you keep those under control? And again, I think this is where financial services have a good advantage over other areas, and they tend to have very robust ways of dealing with incidents, of handling complaints, escalating them to the right place, whereas in other industries things may be sat upon before they're escalated to the correct teams, which means reporting things within the appropriate timeframes can be very difficult. Financial services tend to have got used to this because of the requirements around trusting customers fairly, things like that require robust complaint handling, and because they're so focused on trust and building relationships, they're not just dealing with complaints well because they're being forced to by regulation. They're dealing with complaints well because that's part of providing an excellent service and making sure you're learning and improving from these opportunities that come up when failures occur. What can we learn from that? How do we improve this? How do we make things better?
It's interesting to see how the press is indeed focusing very much on that 4%, that 20 million, and then the additional FCA fine that you could get if you have it wrong, and maybe the additional fine you will get once we move over Brexit, and you can also get fined by two regulators or 3 regulators. But one of the things that I don't see too much in the press, and I think will be an area of interest coming future, is a class action lawsuit. Is where the customers will actually take the right into their hands and go to the courts and demand demand compensation for these kind of data breaches, not a way for a regulator to put in a fine, which they, let's be honest, they don't see anything of, but go towards a PPI model where they are just claiming money back for doing it wrong. So I'm very interested to see what's going to happen when the PPI, the magnitude of PPI firms and PPI claim firms across the UK run out of claims there. Is data breaches the next one they're going to focus on?
Interesting, just to go back to what you were saying about multiple fines from different regulators. It is possible that, take the UK, if you breach the regulation, you could get a fine from the ICO, the UK's Data Protection Authority, and one from the FCA, the Financial Conduct Authority. And then, but it's probably unlikely, just talking to them, it's theoretically possible, but there is dialogue between the FCA and the ICO, so they probably would ensure that they levy the maximum fines twice. They might mix and match a bit. But once the UK leaves the EU, there's a possibility of a triple whammy. A firm could get fined by the UK Data Protection Authority, an EU Data Protection Authority, and the UK's FCA. So is that a realistic possibility?
Well, I mean, I think what we tend to see is that they have a published memorandum of understanding between the ICO and the FCA, and they clearly work closely together. I think we particularly saw double enforcement when there were very tight constraints on the level of fines the ICO could levy, because for global financial services organisations, they weren't a particularly meaningful impact, whereas the FCA could go to much higher levels and regularly did for significant data breaches, many multiples of what the ICO could do. I mean, I think the messages we seem to get at the moment, although everything on the topic of Europe is a little up in the air at the moment, seems to be there's a lot of interest in remaining aligned, in doing things together and working well, but clearly if someone is infringing and causing issues for data subjects in multiple jurisdictions, each of those jurisdictions is going to want to make sure there are incentives to stop that behaviour, and big fines has definitely caught the attention of organisations. I do firmly believe that we will not see major fines, and many of the people making the noise about those mega fines are using it to drive a particular, I guess, either a media point of view or perhaps trying to sell a service around that. Being pragmatic.
I find that hard to believe.
It is hard to believe, but it's true.
And of course, any news story, any journalist will go for the worst case scenario.
Yeah,
which is the headline.
And it's worth considering that, because clearly it's possible, but I think most of the issues we see in organisations are far from that true most egregious, and particularly I think they'll be reserved for organisations that are trying to break these rules repeatedly. And what I've seen across financial services is they're not. They're doing their absolute best to comply with these, not because of the compliance stick, but because, as we touched on earlier, that carrot of building customer trust and engagement. They're doing the right thing to protect their customers.
I think this leads us into the next section around impact on business operations, and Michael, you touched on this earlier. And the sense that I get from this report is that in financial services, at least, some of this maturity, this progression, has already happened some time ago, and this speaks to the conversation you had with Simon McDougall at the ICO, and where he talks about more sophisticated marketeers have moved on from some of these practices quite a while ago, in an effort to build the trust that Stephen's been talking about. So I'd like to put that out to the three of you. What other areas of business operations do you see be potentially impacted? Yes, it's important to ensure that regulatory measures, data protection measures, don't become so restrictive. How is this? Where do you see some of the pain points, or where do you see some of the successes in this area?
Well, one pain point could be the use of artificial intelligence. It's still at very early stages of use by any organisation, artificial intelligence, at the lower level of it, of being machine learning. But the European Banking Federation told me, and it's in this chapter 4, that some banks are concerned that tough rules on the use of AI for data processing could have a negative impact on business operations. And there's something in GDPR called Article 22, which sets out rules to protect people from automated decision making that's got no human involvement. It's one thing for a human to make a decision on somebody's data, but if a machine's doing it, there are ethical issues that surround that. So if firms are restricted in how they use artificial intelligence and the various variations of it, that could affect their ability to process data.
So on the other hand, it's also a very interesting point that you're making there. It could also be an opportunity to do it right. I mean, the GDPR does not stop organizations, especially not financial service organizations, who have a reason for using your data from processing it or from using it. It just stops them from abusing it. And where any organization, essentially, not just financial services, could not develop an AI solution that works with that data in an ethical manner, in a way that we as customers would also want this data to be used. Maybe that's the wrong solution that they're building. So it's generally, I think it's and it might really be an opportunity to do the right thing and develop their further technology in a way that works with GDPR instead of around GDPR.
Now, some of this, you could argue, might be based on the interpretation of the relevant data protection authority. And whilst the ICAO might take one perspective, you could say maybe even perhaps regulators in other countries may take a different perspective. You know, does an organization have privacy in their heart? I think was one of the quotes you found from a relevant regulator on the continent, which might be slightly different than the perspective of others. And I mean, how could that affect business operations? You know, differing interpretations.
I think one of the huge benefits of GDPR was that it would bring consistency, so that those financial services definitely are very popular with this, that have operations across various elements in Europe, historically had to comply with subtly different rules in different places that added complexity and difficulty. And clearly, organisations do not want that complexity. They want to have a standard approach so they can get economies of scale and efficiencies. And it's early days, and there are areas where different regulators have taken subtly different interpretations at the moment. But overall, I think we're seeing that for financial services organisations, this is providing more consistency. And we'll touch on it in what's next. But what's quite fascinating is watching global regulators far outside the EU as they upgrade their privacy rules. They are broadly aligning with GDPR as an approach. Now, there's clearly minor differences, but as a conceptual and a direction of travel, it appears, I think this was probably one of the goals of the EU when they started this, is becoming the global standard for high quality data protection. And that, if that does become consistently operating globally, that will only be an excellent thing for financial services organisations, because it will allow them to operate consistently and therefore drive efficiencies. There's a fantastic quote in the report from very experienced data protection officer Suzanne Rodway, and she talks about there's no getting away from the fact that a business that's trying to move in an agile, innovative way finds regulation frustrating. But she says rules that make businesses think carefully about the data they ask for, what they do with it, who they share it with, and it can only be used if certain legal conditions are met, are all fundamentally good business practices that should be built into processes anyway. I think it's what I see. If you interpret GDPR pragmatically and achieve what it's trying to achieve in what you're doing, then normally those are good things you should be doing anyway. And it's an important moment to pause and reflect, I think, in an organisation. If one of your standard business practices runs counter to the principles of GDPR, that's worth looking at, because as you are forced to be transparent, you may well find that customers are a little surprised and unhappy to find these kind of things going on with their data.
Well, this leads us into our next section. Your points around consistency, transparency, pragmatism. Who loves that more than executive management and board, who are under plenty of scrutiny around how their organizations deal with the requirements of the GDPR. But what I'd like to do is just turn this over to you now to draw the kind of the salient points that you saw around the executive management and board scrutiny in your development of this report. Who did it well? Who did it less well? What were the key points that jumped out at you?
I mean, I think there's a fantastic quote from Simon McDougall from the ICO in the report where he explains about the impact of GDPR. This is one way that he says, the good news though is that GDPR cuts through to the top levels in a way that not many regulations do. It was a talking point for a long time and got senior management and boards in virtually every organisation genuinely engaged. They would have to be living under a rock to not recognise GDPR as a major issue last year. In that respect, job done. And I think that's a wonderfully powerful way of distilling down what we saw, is that this became an issue on nearly every board level agenda, just to check what was happening, where they were. Many they were reassured by the information they were receiving. But I touched on earlier about how this is a different regulator than they're used to. GDPR is a lot less prescriptive and has a lot more areas for interpretation than some of the other regulators that financial services organisations have been used to dealing with. So when asked, are we GDPR compliant, you can't say yes. You can say we have a process in place that moves us in the right direction, we're attempting the right things, we've managed the risk to a pragmatic level, we've got a position we can defend if there is an incident, we can explain why we came to these decisions, which are all very powerful, but often senior leadership wants to, no, that's interesting, but tell me yes, we're definitely safe. And on some other regulations, you can say, yes, the requirement is that we keep these records for this period of time, or when we offer this kind of service, we have to include this disclaimer at the bottom. We're definitely doing that. I can assure you we're compliant with that. And so it's interesting to see this is much more of an approach rather than a requirement. And where we've seen some people so desperate for that clarity of ironclad answer have been given legal advice that perhaps is a little simplistic and requires over-compliance to make sure there's no gap. And we saw this with some people asking for consent on things that absolutely did not need that kind of consent. So it's fascinating how, and the regulators did a great job. I think there have been some excellent myth-busting blogs have been published, getting the message out to cut through some of the noise around some areas where people over-interpreted regulation. And clearly, over time, we'll see as enforcement actions start to happen, that will be the true level of where the bar needs to be set.
I think top management and the board directors had a bit of a head start in the financial services companies compared with other sectors because of the senior managers regime, which came into effect in 2016 for banks, and it's gradually been introduced to be fully in place for all firms by the end of this year. Because under that senior managers regime, every senior manager needs to have a statement of responsibilities that clearly says what they're responsible and accountable for. And every year, the firms need to certify that their senior managers are suitable for their jobs. So when GDPR came in, that just added another layer of responsibilities in that statement of responsibilities. So I think it's just made it a lot easier for top people, senior leadership teams, to get to grips with GDPR because of that, because they're forced on the senior managers regime.
Another point one of our interviewees brought out, is the data protection officer for a very large Asian bank, is he drew out that the board have been really interested and asked a lot of in-depth questions. And this is because they're very aware of the requirements, and this is driven by a lot of their non-executive directors sit on boards of companies in other sectors, where I think the impact of GDPR has been much larger because they didn't have these base levels. So they're seeing much larger programs in the other boards they sit on that are asking very pointed questions. Hang on, how can you say we've made so much progress? Well, often that's because you've started much further along with some of these foundational elements, like the senior manager regime, like the 3 lines of defence, like accountability. These are things that financial service organisations know well.
And the converse of that would be that those non-exec directors can also then take their knowledge from FS and share it with the organizations they sit on in other sectors, sort of cross-pollination practice, best practice from financial services. That's interesting. We've looked a fair bit at what the top of the organization is looking at. What about the customers whose trust they're attempting to gain and maintain? Here we've got a great quote from Martin Collins, the CPO at Invesco, talking about a key concern of many organizations in the run-up to the launch of GDPR. Are we going to be overwhelmed by subject access requests? And in this case, for them at least, and I think for others, the impact was not nearly as large as they expected. So is customer awareness there? what elements of it, of the GDPR, do you see customer awareness being high or low or even indifferent? If I have to be a little provocative.
It's certainly a regulation that that people know, and not just within the EU. Our previous survey surveyed also a lot of questions outside of the EU, and even there we can see that customers are aware of the fact, especially the more funky rights, like the right to be forgotten or the right to data portability, which is a very interesting one, because one of our interviewees said, well, we're getting people asking now whether they can be forgotten. Well, it's a bit hard to be forgotten when you have a bank account here. It's kind of mandatory for us to keep your information towards that bank account, but it has to be said, yes, they are aware, and there was a genuine concern that per the 25th of May, there would be a flurry of DSAR requests, data subject access right requests, flooding financial services and all organizations, essentially. Luckily, that hasn't happened. There's definitely been an increase. Some sectors more than others. We've seen a large increase in insurance companies, not so much in non-financial financial services. But they're there, and it can cost a lot to comply with them. Before we had the £10 barrier and the 40 days turnaround time. That £10 is gone. That turnaround time has gone down with 10 days, and that has its impact on financial services. And one of our interviewees said, indeed, that does make an impact when you have 10 days left to do it. And we've also heard from other organizations that it can be quite costly to comply with one of these requests, especially when someone disgruntled employee or an unhappy customer just sends out a request saying, give me everything you have, which is quite cumbersome to go and find all of that data. And we'll get to how easy is it to find personal data later in the report. But there's been an increase, and we are seeing that more people are using this right, but luckily it's manageable at the moment.
Yeah, that's very true. And you touched on the expense. I was talking to somebody in a wealth management firm, not for this report, it was afterwards. And this firm manages the wealth of family offices. So it's a very complicated business. And the data subject access request costs between $12,000 and $15,000 to process. But that's very complicated. Somebody else mentioned that it's a simple request from a consumer. Might only have 2 bank accounts with a bank. It might only be £300. So there can be a big variety.
When we looked into the data, we saw that there's definitely been an increase across. We saw that 65% of those working in financial services firms said that they'd seen an increase in DSARs, and that compares positive to higher rates than those outside of financial services across all sectors, where it was 60%. So definitely seeing use of this behaviour. And it's quite fascinating. We touched earlier about claims management and how they may change. They're obviously already using DSARs to get the information they need to see if people have held some of these products that are subject to these claims. So some of the very large retail organisations are dealing with tens, hundreds of thousands of these every month already, and actually for them they haven't seen an increase, not because there aren't lots of them, it just hasn't really changed anything. They're already getting many of these requests. So it's interesting, but we haven't seen the kind of mega volumes that people are concerned about that might bring organisations to their knees. It's more been those wishing to gain access to the data, to check that it's accurate, to understand what's being said about them. I was talking earlier this week with some directors, and they were saying it was prospective employees. When they've completed their interview process, if they're not given the job, they will raise a DSAR to get the background and understand how that happened, which is an interesting pattern of behaviour. Interesting.
Well, this takes us very smoothly into the next section, which is about prospective employees and the desire of many companies to recruit specialist staff and to train non-specialist staff to deal with handling the various requirements of the GDPR. There really is a limited pool of really experienced people, and it's somewhat fruitless, I suppose, to go and ask for for years and years of experience dealing with the GDPR when in fact it's only been out for a year. So where this is creating unprecedented demand, how companies in many cases have struggled to deal with it. Where have you seen the success? Where have you seen the difficulty? Are there particular roles where it's just harder to fill?
I think this is another of the ones where I think actually financial services had less of a problem than other areas. When we surveyed them and asked, has your internal GDPR-related headcount changed over the last 2 years? 47% of financial services firms in the 7 EU countries we covered said there'd been an increase. Okay, just under half, that sounds like quite a lot of increase. When you look outside of financial services, it was 69% of British institutions they had to increase their team. So I think that isn't because financial services don't need this capability, it's that they already had significant resource and capability in-house. So I think that it's been slightly easier for them. And as Helen Bonas from the European Banking Federation highlights, the banking sector generally perceived as being able to pay higher salaries than other sectors, so perhaps can buy the best expertise on the market. I think that may be, I know our hardworking DPOs and various financial services firms on the call may not entirely agree that there are happy salaries for them, but I think compared to other industries, there is some flexibility that perhaps isn't there across all areas.
Excellent. Well, unless there are any more comments on that or questions, I think we should turn to the penultimate section, which has some reflection of Michael's point around AI earlier, technology-assisted GDPR compliance. Seems like we're a year in now, or nearly a year. There must have been a whole host of various technology-assisted solutions proposed. Have some been more successful than others? Certainly, technology plays a crucial role in protecting data in financial services. How can these tools be tailored to various companies' requirements? Which ones are particularly useful?
Well, when I first started to work on this topic, I thought, well, how many tools are there? But if you go back to the 2018 report, there's some very good survey responses there, and I think it's 1, 2, 3, it's about 8 different tools. There's inventory management, there's data protection, impact assessment, execution, unstructured data scanning, cookie compliance, data loss prevention, consent preference management. So there are a lot of tools, and our report produces a table that compares the FS sector use of these tools with all sectors. And there is a difference. I'm not going to try and explain it, but if you look at the report, you can see there's some subtle differences.
I think the key thing I took away from that analysis is that broadly financial services is using more technology than the whole area. But again, a very experienced data protection officer brings some shade to this comment. Suzanne Rodway quoted, "One of the things that annoyed me most about GDPR was how many solution vendors came out of nowhere saying they could make us GDPR compliant." I think very wisely she points out, it's not one single thing for which a single solution can be found. It's hundreds of little bits and pieces. And she highlighted, we own the technology-based tools we use and have repurposed these internal tools for breach management, DPIAs and DSAL reporting. I think that's what I saw for financial services. They often had some of these capabilities they were using for similar things that could be adapted to this. But I think it's fascinating, similar to the noise about fines. The other thing we saw across the industry was this, buy this one thing and we will make you GDPR compliant, which I think financial services were pretty exhausted after we had that for Sarbanes-Oxley, for Y2K, for all these various things. There's always this one solution that's going to solve everything. I think hopefully, clearly see there, those who are knowledgeable in this area are well aware that it takes more than just one piece of kit. No box with blinking lights is going to solve this problem, where it's about fundamental rights and providing those to your customers.
And there's still a lot of manual processing, which is a point that Simon McDougall, the ICO, pointed out, and also Kirsten Mycroft, who's the Global Chief Privacy Officer for BNY Mellon. She said that they are automating some of their processes. Some of them have been manual from day one, but the level of automation is gradually increasing, she said.
Well, my last thought on that was, Michael, you mentioned cookie compliance, and that does feel like it was turned up to 11 in the run-up to GDPR launch, as Maya noted earlier. The flurry of emails seeking, your permission, your consent, and for me, it was a great way of flushing out all those things I'd signed up for years ago and completely forgotten about, but clearly I was still sitting in their database. Perhaps less cookie compliance, we can dial that down a notch. I guess then if we kind of turn the corner and sum up, we would ask, has it all been worth it? Or is it too early to say? Where can we reflect at the activities of the past year? And then looking ahead, what comes next? We've got a fairly high societal perspective from Kirsten Mycroft there, which is as it'll benefit society as a whole. This is your point, goes to your point earlier, Stephen, around accountability. It'll help to prevent breach of data misuses, perhaps even doubly or triply so as it's adopted more internationally in bits and pieces or in whole. So has it all been worth it?
Yeah, so I think, the person to turn to here, I think, as we quoted in the report, is Simon Dougal from the ICO, who firmly gets off the fence and says, GDPR was an incredibly ambitious piece of legislation. Its objective was to rewrite how the handling of personal data is regulated in Europe. When you think about how much information is personalized now and how every firm is a data firm, it was an incredible thing to attempt in one go, but it succeeded. And I think that is very much what we're seeing, is that this is something, and to quote Kirsten at Bank of New York Mellon, our clients expect you to do it, our employees expect you to do it and to get it right. Recent breaches have brought it into sharp focus and show there's a need for smart regulation in this area. I think that's being resonated around the world, as I touched on earlier. We're seeing other countries start applying GDPR type regulation in their environments because they're seeing how vital it is to give people rights over their data so it can't be misused. And we're fortunate in financial services to date, most financial services organizations have not been fully exploiting the data that they have, which has helped build trust. But obviously looking to the future, it's important that as they build more analysis of their data, better understanding of their customers, they do that in a way that builds customer trust and doesn't come across as creepy.
When I was summing up with this chapter, I thought I would get more negativity from the financial services organisations that I spoke to, because I write about financial regulation of all types quite a lot, and there's always a groan factor when a new piece of regulation has to come in. People get sick and tired of it, but they realise there's a reason for it, and the regulators themselves often do a cost-benefit analysis to show that yes, it's costly, but then look at the benefits. I haven't actually found a quantitative cost-benefit analysis done by the European Commission or anyone else on this, but anecdotally, people like Kirsten Mycroft from BNY Mellon will actually be quite positive about the overall benefit. And I don't think they're saying it just because they're going to be quoted and they want people to see that they think it's a good thing for consumers. I think they genuinely believe that privacy, data protection is a main issue today for people, and banks, insurers and asset managers, they've got to do their best to protect people's data. So it has been worth it.
Yeah, I would absolutely second that. I mean, it was an incredibly scary piece of regulation when it came in, and what we've seen that organizations and financial services organizations have done is amazing. They've taken it, they've run with it, they have updated their processes, and with doing that, they've started to believe in this regulation. And I think if they continue on this journey where they are going towards more sustainable compliance, where they are implementing this globally instead of just within the EU, we will see a better world out there. Okay, maybe that was a little bit too much.
Better for society as a whole. Stephen, you mentioned adoption internationally in the state of California in the U.S. has been one. The state legislature has been looking at adopting significant portions of the GDPR, which will have a huge impact given all the companies headquartered in California.
Indeed, and we've seen similar things in other countries around the world. I think India is running something similar. There's Singapore and Hong Kong are sort of reopening their privacy regulations and changing things there. So I think this trend is only just beginning. I think it's likely, given the move to more and more data and more use of that data, we'll probably see adaptations and improvements of GDPR itself over time. Firstly, through how it's enforced and how it's interpreted, but eventually through further regulation to make sure it remains up to date and relevant for the world where every sector, but particularly financial services, will be using data more and more to provide a tailored and more beneficial service to customers, but making sure that's done in a way that protects them.
Mm. Yeah, and it could be quite scary for organisations that think of all these different regulations they have to comply with around the world. But the answer to it is privacy by design, or data protection by design, is the term used in GDPR, which means that everything you do, it automatically you comply with all of the privacy data protection requirements. And although they'll vary from jurisdiction to jurisdiction, it will only need a tweak in each country to ensure that data protection by design policy is followed.
That's been fantastic. Thanks to all of you for giving us an overview of the report, for offering your insight, for pulling out some of the key learning points and the key data points. It's kind of the gold nuggets that you've been gathered as you've gone along and spoke to so many people. We've heard some great stuff on the impact around business operations, some key points around 3 lines of defense, a fair amount around accountability, and certainly definitely as it relates to the senior managers and compliance regime, a fair amount around how regulatory alignment is improving, and consistent points throughout around how GDPR can be highly effective in building customer trust. So in sum, our speakers think that it has been worth it, and there's a fairly bright future ahead. Financial services has some inbuilt advantages, perhaps, in how they deal with the various requirements of the GDPR that other sectors can learn from, and that can only be a good thing. So in sum, I'd like to thank our speakers, and thank you for joining in us and contributing with your questions. Feel free to contact any of them as you wish. We've got the contact details up on the screen. And with that, I would like to wrap up and thank you very much.
Thank you.
Thank you, Dave.